Welcome once again. This is Si Wing Yi, and I'm just gonna go ahead and quickly go over today's topic. It'll be a very short video presentation. And once again, I'm gonna reuse this very unique terminology: date the interest rate, marry the rental property now. Again, blueprint to investor success in today's housing environment. Then, of course, you buy now, then you potentially cash out refinance later. How much later? I have no clue. And you know the interest rate, you know the mortgage interest rate is going to go down eventually. That's is bound to happen. We just do not know when. But real estate investors, be patient because it will happen. To what extent, how low, we do not know. So let's play some projections. Let's use some assumptions. Okay, so let me continue with my presentation. So I'm going to use a, uh, a sample of a property, most likely in the south and southeast, but I'm going to use Florida as an example because clearly properties in Florida, in the specific suburb market, that's where the opportunity exists during today's unique housing challenge and crisis. So the blueprint, now I'm not going to go over the numerical formulas, but if the rent to value ratio is anywhere from 0.07 to 1% of the purchase price, you multiply whatever the ratio, then the yield and the cash flow is going to be very good based on 25% down payment. So the rent to value ratio in this case is almost 1%. The capitalization rate is a whopping 7.2%. Now the benchmark for good cash flow for capitalization rate is around 5.5%. So this is higher than the minimal blueprint for positive cash flow based on 25% down payment. Cash on cash return is 4%, and a total return on investment with tax savings only in the first year only is 27%. On subsequent years, from year 2 to year 10 and beyond, your internal rate of return potentially is going to be very, very high. So just the first year earnings is very, very attractive indeed. So the initial purchase price in this case is a new construction, single family home, 3 bedroom, 2 bath. Okay, some of you got a little bit of hint is in LaBelle, Florida, which is in the suburbs of a Southwest Florida, Cape Coral region. So this property has been discounted because builders are reducing their prices because they have slightly overbuilt based on the demand being lower as a result of the skyrocketing rent. So they are offering investors a number of incentives, and one of them is they're going to have a reduction of prices, not that much, but enough to be very enticing. And of course, they can rate buy down, and they got closing costs covered, various builder incentives. So this is a small window of opportunity to buy a very fast growing, one of the top fastest growing market in the country for a number of years, especially during the pandemic here in Florida. So anyway, the price is an outstanding deal. I don't know how many more deals is available, but let's assume that maybe a few more deals available for the short-term window of opportunity. So in this case, it's a real situation. One of our investors have achieved this recently as we speak. So the price of this great valuable property is only $245,000 and a 25% down payment, even with a 7% mortgage rate, you can still cash flow, but I'll get to it momentarily. The down payment is $61,000 plus closing costs may not be covered by builder incentive. So total out of pocket almost $67,000, And the rent, as you can see, is very, very high, around 2,100, because the rental market is extremely, extremely strong in many areas of the country, especially here in the South and Southeast, for example, in Florida. And if I factor in the other monthly debt expenses, property taxes, insurance and property management fee, and vacancies in 5% projection, as you can see, vacancy factor 2%, and the appreciation potential for 5%. So even with a relatively high 7% investors monthly mortgage rate, 30-year fixed rate mortgage, you can still cash flow because the rent is so high, 2,100. You can still cash flow at the end of the monthly around $249 positive cash flow. That is a very, very attractive numbers to say the least. Right, so this is an initial purchase based on even a higher interest rate. So still pretty decent cash flow under the circumstances. And then, but wait, there's more. By buying now, you will enjoy the multiple of benefits as indicated on the next slideshow, which I'll show you. I'm not gonna go over the details of it. You can, when you watch this video, you can pause for a moment and really digest the multiple of benefits associated with owning a rental property. It's a history's most proven and powerful multi-dimensional real estate asset class. It's the world's greatest wealth building vehicle. Not only you get cash flow and or passive income, which is one and the same, you get a massive amount of tax benefit, passive losses, depreciation, cost segregation, real estate professional tax status, cash out refinance tax-free in the future, sell your investment property, do a 1031 tax-free exchange, and you don't have to pay taxes on the move up of a property appreciation and equity growth, anywhere from 3 to 5%, historically speaking, often a lot more. Of course, you're able to leverage your purchase with a loan, OPM, other people's money, which is you finance, you will leverage, do debt financing, which is no other asset class can give you this powerful incentive and more benefits. Furthermore, all your mortgage payment you're paying as an investor, all the property taxes that you have to pay on a monthly or annual basis, and insurance you have to pay on your rental property, and any kind of vacancies, factors, and maintenance issues that may occur, and it will occur as long as you bring a tenant that you can charge a tenant monthly or annually more than your total of your debt service of your rental expenses, and still end up with a monthly positive cash flow. That's an amazing situation. So tenant, once again, could pay down your mortgage payments over 30 years or less, and then some, and then they're gonna pay off the remaining of your debt service. See, all you need is your down payment, and everything else is gravy. So, and of course, you have the ability to raise your rent because the rental market is very strong. There are more renters than ever before in history, for the reasons I'm sure you should know why by now. So, you as a landlord, investor, you should raise your rent equal or above an annual inflation rate. So in this case, I'm using the projection initial $2,100 rent after you purchase this property. For the next 1 to 2 years, you can potentially raise the rent from $2,100 to $2,200, and of course 5% appreciation moving forward. Again, that's who knows, right? I'm just using assumptions and projections. Some of you may contest some of my assumptions, but I'm using a historical assumptions. And of course, we discussed about the tax benefit. So amazing benefits. And then in the next few years, we don't know when, could be next year, could be 2 years later, when the interest rate, when the mortgage rate for investors drop down from whatever it is right now to, who knows, 6%, 5.5% or less, then you can cash out refinance. It is that simple. Cash out refinance. And after the cash out refinance, here are the new projection of this particular property that you purchased today. We're talking today's November 2022. Once again, this is an assumption. So a few years later, right before you refinance, your house value has increased from 249,000 to 299,000. Bear in mind, you're buying this new construction home from a builder at below market value. That's the kind of incentive you're getting. So again, based on the assumptions, so your house, your rental property increased from 249 to 299. So by buying early, like right now, you're getting the potential equity appreciation and all that. And furthermore, you can raise your rent from 2,100 to 2,200. And then if and when the interest rate goes to 5.5%, you refinance. After you refinance, guess what? You have a rental increase meanwhile, and then you will refinance from 7% to 5.5% in this illustration. Look at your cash flow. Have to increase all the way to $519 monthly net cash flow. Meanwhile, you're getting the tax benefit, the debt pay down, the rental rate increases, the whole appreciation potential, the whole 9 yards. So that's what you're getting. All right. So let me go back to the slideshow again. So again, your initial purchase. So your initial purchase again was 249 at 7%. Then you refinance down the road, your cash flow increase, and you enjoy the multiple of benefits. So really, I mean, this is should be a very simple concept, very motivating explanation, and it's happening. So yeah, that's what's happening. If you are focused on your wealth building and ignore all the chatter out there, all the negative headlines. So as a real estate investor, you have amount crisis equal opportunity. So this is a great situation. So that's all I have to say. And the number speaks for itself. The assumptions are what they are. The reality of today's housing market is the opportunity for real estate investors, and you can do it. All right. Thank you so much. This is Siwing Yu. And if you receive value on this video, please smash the like button and subscribe to my YouTube channel. And also enter my website below and sign up for a free weekly newsletter. You can receive weekly real estate investment news from our organization, so you can become a really successful long-term real estate investor. Thank you so much. This is Siwing Yi. Have a nice day. I will see you on the next video. Bye-bye.